Today we close with a candle of indecision as the S&P 500 fills both gaps out here. However, what is in store tomorrow and how will this affect the Fed's next interest rate decision? We come over and look at the fear and greed index. Right now, we're sitting at 28. We are still stuck in fear territory. The market all year long has been stuck between extreme fear and fear. However, when we look at the most recent investor sentiment survey, it's starting to improve a bit. We had those 2 weeks back to back in the 19s. Last week, I had a reading of 21.6. And this week, we have a reading of 27.4. Now, when we come over and look at how the indices fared across the board, the Dow was down 155 points. The NASDAQ was down 94 points. S&P 500 down 18 points, with the Russell 2000 being down 0.98. Now, when we look at advancing issues versus declining, we had 55.9% of issues declining on the day. Then as we come over and look at the sectors across the board, by far, technology outpacing everything else to the downside. To the upside, consumer defensives by far outpacing everything else. Healthcare, basic materials, and consumer cyclicals were all in the green. And let's not forget, tomorrow, all eyes are going to be on the PCE price index. How is this going to dictate what the Fed's next move is going to be? And we look at the economic calendar for tomorrow. Keep in mind at 8:30, we have the core PCE price index coming out. However, at 10 a.m., we have the revised consumer sentiment, followed by revised inflation expectations. So we have news at 8:30 and 10 a.m. tomorrow. And today we had news come out at 8:30 and 10 a.m. All the news that came out today ended up being better than expected. So why do we see stocks going down lower? Now when we come over and look at the Fed watch tool real quick, we can still see the market is pricing in the next rate cut out here in June. There's a 55.7% chance the Fed is going to be cutting rates. However, if tariffs start to cause inflation to rocket up, will the Fed still be able to cut those interest rates? Now, last night after the bell, we see global markets slide, spooked by Trump's auto tariffs. And if we look at this chart real quick, I just want to scroll this chart, you guys, just to visualize this chart. As we look right over here, what chart pattern does this look like? To me, it looks like a very obvious bear flag pattern, which would imply we could see lower prices in the near future. Now, since Trump announced those tariffs on automotives last night after the bell, notice we come over and look at Ford, down 3.88%. We come over and look at General Motors, big gap on the way down 7.36% on the session. Then I was looking over here at KRE, the regional banking ETF, and noticed KRE has been on the decline as of recently. And if we look, it has not yet completed this A to B equals C to D pattern. So in order for it to complete that pattern, there still could be more downside pressure to come. We look right here at this article, Nvidia stock now looks cheap, some analysts say. So why does it keep on falling? And I got a question for you guys real quick. If we come over and look at Nvidia, does Nvidia actually look cheap? Right now, you can see we're below that anchor VWAP, but if we go ahead and we zoom this out a bit and we go over to, let's say, a monthly chart, I want you guys to focus at this. Look at the parabolic move that we had on the way up. A massive move on the way up. The MACD indicator has never been this high in history, and now we're starting to get that bearish cross. When you get the MACD indicator crossing on a higher time frame chart, like the monthly chart, that actually shows us that it's highly probable we're going to see a much more deeper retracement to come. If we were to pull a Fibonacci retracement from the swing low here, right up to the swing high, notice the 38% retracement comes in about 98.77. We have the 50% level coming in at 81.95. Let me know in the comment section down below, has Nvidia already bottomed, or how low do you guys think Nvidia is likely to go? Now, I want to bring this up to you guys as well. If we look, we all know April is such a great month out here in the stock market. And if we look at election years, we can see that for the Dow Jones and the S&P 500, it ranks as the second best month post-election years. And with the S&P 500, it's been up 12 times, down 6 times, with an average return of 1.7. However, is this year going to change this stat a bit and be down year number 7? Now, we come over and look at the volatility index today. We can see the VIX was up 1.97%. And we look at this on the 5-minute chart. We can see early on the VIX was falling as the market was rebounding back up. But all in all, the VIX basically closes in the middle of the range. We come over and look at the dollar index today. Dollar index basically had that push down, close in roughly in the middle of the range today, down 38 cents on the session. Then we look at the precious metal gold. Gold today making another new all-time high. Can't stop, we won't stop, says Mike. We don't care about your measly little target down here at 2,974. we are going higher. We are in times of uncertainty. Then I want to remind you guys, there's only 4 days left to take advantage of Apex's 80% sale off all their valuation accounts, pass in as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike. Tonight, I'm going to be turning all 20 of these evaluation accounts into PA accounts. So again, if you guys want to check out Apex, use the link in the description box down below. Now, if we come over and look at the SPY real quick, here's something we were talking about today on the live stream. And really, is this SPY on its way back up towards that 50% level? Or is it simply going to go ahead and come down, start basically testing the swing point here? And if that breaks, go down, taking out the lower swing point. If this lower swing point gives way, as a friendly reminder, we still have a much larger target to the downside. Top number 1, top number 2, and that pattern would complete all the way down here at 536. So if this low gives way, that would be the lower target I most certainly want to focus on. But tomorrow with the PC price index being in focus, is that going to be the reason for stocks to rebound or come a little bit lower? Now, as we look at this, let's say on the 4-hour chart, notice the MACD indicator is flattening out near the 0 line. That has me a little bit nervous. As we're not really pushing up and out of this area. We made a little bit of a push, but now we're starting to come back into this lower level consolidation area. Today, you can see we wicked into that candle of that gap that we had out here for a Monday, and then basically still closing near the lower end of the range. On the 30-minute chart, notice the MACD indicator basically flatline well below the 0 line, and this could basically foretell we are getting ready to spike on the way back up. If you look right here, we basically wicked right down to the wick to the top of this candle, and depending on how you look at this, if you want to look at the candle close, yes, the gap did not fill. If you look at the candle wick, then you can consider that a gap fill. However, if we look at this, we've also had a move lower, and we're basically consolidating after the move lower, which could basically foretell we're about to take another leg lower. Now, when we come over and we look at the futures markets real quick, we start off looking at the 4-hour chart, and keep in mind, we've pulled a Fibonacci retracement from the swing low right down here, all the way up towards the high. Notice today we came down, we wicked the 61.8 level, barely missing that weekly point of control level. But then look, we wicked up a couple times intraday, only to come back down towards the lower end of the range. Again, we're seeing more and more weakness out here in the market. And I've been warning you guys about this. The selling is not over with yet. Now you can see today we did make it up towards taking out the P point, but something we talked about this morning on the live stream, once we wicked right down here this morning, wicking below the overnight low, and we started coming back up, I said, watch out. Are they going to run it right back up towards these highs and potentially trap them and start sending it back down? That's exactly what transpired out here. So tomorrow is going to be very critical. How does the market react to the news? As you look at here, we're closing very close near value area low. I'm going to classify today's volume profile shape as a D as in dog, which indicates that tomorrow is likely going to be a breakout or a breakdown from this pattern. Is it going to be a nasty bloodbath Friday, or is it going to be a relief rally? Let me know your thoughts in the comment section down below. Now, when we look at value area low, that's going to be 5738.75. If we start breaking down below that, I want to retarget today's low, and then anything below today's low, I want to refer back over to the 4-hour chart. I would then want to start to target the weekly point of control, 5716.75. Then this next high volume node right over here on the profile at about 5710. Anything below that price point, I then would want to turn my attention to over here towards the 78.6 Fibonacci retracement level at 5691.5. And then we start breaking that, then you know what? It's very highly probable that we're probably going to take out the low from March. So again, we're at a critical time. Now, if indeed this area holds, today's low holds, that could actually set up a much larger ABC pattern on the way up. And that would be something like this. The impulse leg up would be the A to B leg. The B to C leg is a corrective leg. And look where we project all the way up here at 59.03. So we need to see, does this swing point hold or not? Then how does the market react as we approach those lower levels? Now, as we come over and we look at the QQQs real quick, on the daily chart, what do we got over here? It looks like a hodgepodge, a big mess, but we've had this ABC pattern on the way up. Pattern completed. We had that anchored VWAP. We basically came up and tested that, rejected off it. We had the 38% retracement right up here, rejected off that. And then today we started on the way back down. Now notice the MACD indicator on the daily chart does have a bullish cross. However, could that be about to turn? On the 4-hour chart, MACD indicator looks like it's about to roll back over. And notice this lower level consolidation I was warning you guys about, we broke out from, but now we're back in that area at a time when the MACD indicator is back at the 0 line, which could be a nothing more than a recharge point for another leg lower, or at minimum a retest of these recent swing lows that we've seen. On the 30-minute chart, as we come over and look, Notice today we have that D as in dog shape profile. And let me go ahead and clean this chart up here just a bit. Now, if today was the high of the little bounce that we've gotten off this area, notice we want to measure something like this, the A to B, B to C. That gives us a price completion all the way down here at 473.08. As we come over and look at the futures markets real quick on the 4-hour chart, what do we have? We look right over here. We filled the gap out here today. So the gap from Sunday night, we have went ahead and erased all those gains since that. And then now look, as we've come down, we had to push down. Consolidation near the lows usually will lead towards lower prices. Now, the next lower price I have in my eyesight would be this weekly point of control at 19,859.5. We break below that. Then the next area would be this high volume node, somewhere in the ballpark of 19,679. Now, if we can go ahead and turn and start breaking above this upper part of this consolidation, I would then want to turn my attention back towards this area of the profile, anywhere from the price point of 20,325 to about 20,380. Then as we come over and start looking at the daily profiles real quick, notice we have an untested point of control down here at about 19,852.25. We spoke about that this morning on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. We're going to be giving away another 50K Take Profit Trader account. So if you guys want a chance to win that account, make sure you join us on the live stream. So as we look at this, as we look at the daily profile, notice it's nothing more than a D as in dog shape profile. And again, it indicates we're likely going to get a breakout or breakdown from this pattern. And a lot of times the first way we break ends up being nothing more than a trap. So if we're going to go ahead and we break to the downside first, do we maybe run down, take out that point of control, and then just rip right back up? That most certainly is going to be one of the situations in my playbook out here tomorrow. Now, as we look at the volume profiles, you can see we're basically right near value area low. That price is going to come in somewhere about 2,000, somewhere around 20,003.75. Point of control will be about 20,071.75. So if we start breaking below value area low and we start coming up, I want to target that point of control. Then we can target value area high. And then we'll see if we can start having a more meaningful push on the way back up. If not, watch out. We're coming back down towards lower prices, which would be the weekly point of control. The swing area right down here, we had this double bottom, and then potentially coming all the way back down to the lows in March. Now, if you guys trade with prop firms, you want to see which prop firm is best, Apex Trader Funding or Take Profit Trader, make sure to watch this next video right here.